All right, ladies and gentlemen, I hope you had a wonderful day. We had a very chill start to this exciting week of earnings and CPI, but it gives us a second to slow down. And after what we saw today, I want to talk about something pretty interesting, and I believe it is the silent short squeeze we have going on, and part of the reason why Carvana keeps going up. So I have a recap of the day for you. We're going to talk about why we saw what we saw, even what I'm expecting moving forward, but now we are noticing something with the data, and it relates to Carvana being short squeeze. I know, I went down a rabbit hole, so I got a lot of stuff to show you. We're going to talk about it. Got a nice little recap. I even got a couple of plays. So, Chad, all I need from you is a like on the video. Show that thumbs up. We post these watch lists every night, and we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. First link below. We will see you there in the morning. But Chad, let's get right into it, and I have a lot to show you on the screen. So, yes, I was really excited yesterday. I was wearing the jersey. I was getting really hyped up. It's a big week. We are kicking off earnings, and then we are even getting the CPI on Wednesday. Remember, Wednesday morning, but if you look at today, it was a very cold start. We traded around that 4,000 level. Not much happened. And what we had in the morning, believe me, I'm going to jump back to this. This means a lot of things. But in the morning, what got us off to a slow start, it was China producer prices. And as you see, that number says negative 5.4. That is literally a drop of producer prices by 5.4%. If you haven't been noticing what's been going on with China, they do not have inflation, and today the narrative was around Chinese deflation. Now, it may seem important, it may not as of right now. This moved the market a little bit. That's what kind of got us moving. We're going to bring this up a little bit later, but then what else happened? We were talking about all of the Fed speakers that we were going to be getting today, and they came out. They pretty much said the same thing. It sounded more dovish than not. A lot of them were saying that they're close to pausing or they think that's enough, but inflation's too high, higher for longer, and ironically, though, the bonds caught a bit on all of that, but that was pretty much it. The Fed speakers, not too big of a reaction. People reacted pretty crazy to the China data, and now there was also one more thing that came out today. It was economic, and now this is where we get into the rabbit hole, but the Manheim used car price index. So you have heard me bring this up a lot, I think even towards the end of last year. If you remember when inflation really started to turn down, we were talking about the first time this drop. Now, I got good news for you. If you're looking on screen, if you go to Manheim.com, they publish this report. You do not need any fancy software or anything like that. You could get all of this, but this came out today. This is how the chart looks, and what it is the biggest decline, I believe, in prices since both like 2020 as well as I think even all time. I think actually besides 2020's drop, there was no other drop this big. It was a big drop in used car prices. There were a couple of things attached to it. I'll have to zoom in so you could see it, but there's just a lot of aspects of the data in terms of like days of cars, the prices, and how many sales were actually conducted. They were saying supply was really tight, but also how some people have been taking a break. So this came out today, and believe it or not now, the reaction is very interesting because if you go look at autos today, they actually did good, and then now this is where all of the short squeeze stuff comes up. So let me give you one point before we dive into it. I'm going to go into now the stock of Carvana. We're going to talk about some other things and a certain phenomena that has been coming up recently, but before any of that, I just want to give you a little macro call out, and kind of like the Naira and Yuan, maybe nothing happens, but something that we have been noticing in July, 1 year after the yield curve is inverted, we are watching more data sets turn. So again, the producer prices in China consisting or continuing this downdraft, and now people are saying deflation. You're watching the used cars go down, and even last week, it was the first time time we saw the non-farms go down, and if the CPI on Wednesday comes out at the headline at 3% and core dropping all of those baseline effects, I mean, it's pretty much murdering everything, but what you're seeing is the turn of the data. So that's what got me interested in this now. And now the second thing, if you guys remember yesterday's video, I was talking about watching some of the small caps. I ended the video with Rivian and a lot of those plays. Well, this is the Goldman Sachs most shorted index. And from the end of June till like now, again, by the end of this week, we'll be halfway done with July. You are watching a very consistent move on these most shorted stocks. So I'm going to run through Carvana because again, it relates to the Manheim used car index. I'll give you a little piece of it. The reason why some of these car people went up today, they're saying, well, auto prices dropping, that's good for these car companies. They actually went up on that news. But back to the general short squeeze, this is what we were saying. Look at all of these names. We were talking about Rivian, again, $13 to $25 in a couple of weeks. These are the smaller cap names. Coinbase, a little bit bigger, but there has been a lot of these rallies in a lot of these small cap names that people thought were going to die, and now they are coming up out of nowhere. So this is what I was saying, depending on inflation, Powell, everything moving forward, if we are going to sustain a second half rally, maybe it's not going to be big tech, but maybe it'll be everything else. But even then, some of these small caps, they got a lot more room to go. And depending on soft landing, hard landing, that could fuel some of that stuff. So keep that in mind. But now let's talk about Carvana because everybody kept asking me this. I think it relates to the Manheim stuff. And then quite frankly, in this little like portion here, a lot of things happen and a lot of things happen to auto plays. Most of these names I'm showing you that are running, they are either EV related or auto related. You could even go look at Tesla, go even look at the Chargers, but I'm sure even Rivian, again, there's just been a lot of this news back and forth, even some earnings that have been getting them all hyped. But now Carvana, everybody was asking, why has it gone up so much? And I looked into it and there's a lot of reasons. So today, that was the Manheim index. People started to like it, but the first pop from the bottom, this was their earnings in May. They said earnings were not as bad as expected. The stock went up from like $7 to $13. And remember, we traded this towards the end of last year. Like end of last year, they were, I think, filing for like strategic maneuvers or borderline, taking the steps to pretty much go BK. And then, you know what, fast forward 7-8 months in May, they're like, well, our earnings weren't as bad as feared. Investors liked it. And then even then in May, Piper Sandler, they kept upgrading the stock, overweight. They loved it. Stock went up. Month later, June 8th, the company comes out. They reaffirm Q2 guidance, and then it leads into like a 2-day 60% rally. Then on June 12th, Carysdale Capital comes out with a short report, and they're like, this stock is absolutely worthless. They think it was virtually worthless, and then it keeps going up, and now people are saying it's a short squeeze of all of this nature. And then like right before this rally and this Manheim stuff, a couple days ago, July 5th, Piper Sandler again raised the price target, overweight, and then that's where we are now. So what I was trying to say is that I was like, well, the only thing I saw was the Manheim index. It related back, but I just think that's borderline been the story for all of these. And then during all of this was during Tesla's little run up here where they were able to do the deliveries, announce the charging pact. And as everybody was feeling optimistic about the economy, we kind of started to watch that bleed over into some of these smaller cap EVs. So the main conclusion, Carvana has some stuff going on with it. It's related to a lot of these other things, and I think if we continue to go up and the Fed and CPI don't scare anything, we may start to see an era of small caps. But beyond that, the only thing I got out of Carvana is that car prices are turning. So I don't know how you feel about that, but that being said now, I still got a couple of plays for you. Like I said, today was simple. These small caps, this should relate. This is what I brought up today. And one of the only other plays I made today, I grabbed NBTX. It was like 100 shares at like 780. So I got clapped, but they had I think it was a phase 2, or they got a milestone payment from Johnson or Janssen. They went up on that, and this is kind of related. There's a reason why I've been doing a lot of these biotechs, is that I think even with small caps and now biotech catalysts, these are where I think we go from here. Otherwise, I'm kind of just going slow and waiting until we kind of, well, not even waiting, it's just until one of these people on the Fed or any of the central banks actually move. But I still got my bonds in the yen play, but I've been liking some of these small caps and this little silent short squeeze we've been seeing just literally every morning. If you have been on stream, there is one of these small cap movers, whether it's a biotech or even now, again, XPEV, Joby, Carvana. We've watched all of these low key in real time. It just kind of now all culminated into this. So watch out for some of those small cap plays. That's the first thing I'm going to be looking at. And then the only other thing, I told you guys, Disney yesterday, I grabbed 100 shares at 88.14, pretty much right where it closed. It's a very early play on the Netflix, but going in on them. And then again, the old yen and bond plays kind of coming back a little bit. But then again, I think the data and then ultimately how we kick off earnings, that's going to give us what we need. So that's pretty much everything as far as even what I expect moving forward. Maybe tomorrow is like today where we're kind of doing this earnings setup, but after, I'm pretty sure Wednesday was CPI, then Thursday Delta, Pepsi earnings, then the banks on Friday. I think we'll get a little bit more poppy, but this is one thing I've been saying a lot today and in general is just that until we get back here, I mean, I think nothing really surprises us unless it's fuel to the upside. Then in that case, you're going to want to watch the small caps and the underperformers on this first half. Other than that, though, it's like we could still move down a lot, be at the highs of January and even last August, more or less, and nothing would really change. So be careful on the data. The Fed speakers, data hasn't been moving much. People are arguing on if earnings will, but that's what we're going to be watching for. Otherwise, take it slow. Watch some of the individual news, but I'm sure by the end of this month, because we're almost halfway through, you'll see where the sales are at until the end of the second half. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, small lakes create big rivers. That's it. You have to be consistent, and the littlest amount of money to the savings will always go a long way. And do not despise the days of small beginnings, Chadadonia. So take that to the heart. Keep the long terms going. You've made it this far, Chad. I hope you're right. I'm so grateful it's a normal week now. It's exciting. And that's it, Chad. And that's all. We'll see you in there. Get ready. CPI, and then even Powell in 2 more weeks. But then we have earnings, so get ready. Okay, I'm good. I love you, Chad. Amen, Horn. No, I don't even want to leave, but I gotta leave. I gotta go, but I love. Okay, Horn. That's it. It's just hype. It's not even awkward anymore. Go.